Good morning and welcome to our webinar, Cannabis Banking Risks and Rewards, hosted by CB Resource and presented by Tony Rapanich from Shield Compliance. Thank you very much for taking time from your schedule to be with us today and learn more about cannabis banking compliance. This webinar is being recorded and we plan for it to last no more than an hour. Feel free to ask questions in the chat box. I am Robert Finch, Director of Sales and Marketing for CB Resource. CB Resource is based in Irvine, California, and we are an industry leader in providing ERM, strategic planning, and capital planning solutions to financial institutions. We specialize in ensuring our clients, we specialize in ensuring our clients' risk and management priorities are in sync. I'd be grateful for the opportunity to talk with you about your risk management and planning needs. I will also mention that it was announced recently that in the next few months, CB Resource and our sister company, Finance 500, will be joining Stifel Financial as a part of its fixed income and strategies divisions. Today, I am honored to introduce Tony Rapanich, President and CEO of Shield Compliance. Tony will be sharing his knowledge and insights into cannabis compliance and the risk and rewards of banking the cannabis industry. Based in Seattle, Washington, Shield is empowering banks to serve the needs of licensed cannabis businesses and their customers through its suite of solutions. Since 2018, they began seeking to transform how financial institutions serve the legal cannabis market. Its purpose-built BSA AML compliance management software solution supports its financial institutions' clients to simplify compliance, automate processes across multiple data sources, create efficiencies, and unlock new revenue, and scale operations and comprehensive reporting capabilities. Shield has partnered with more than 65 financial institutions and monitored over 10.9 million transactions, including 46.1 billion in deposit volume. As of the end of Q1, these financial institutions have 1.1 billion in deposit balances and 290 million in loans outstanding from over 6,000 cannabis-related businesses, representing almost 20,000 active cannabis licenses. Without further ado, I will hand it off to Tony. Tony, thank you.
Well, Robert, thank you so much for having us today. And as a longtime community banker myself, CB Resources has always been a terrific organization. So we're so pleased to be able to present to your group of customers and members today. Thank you so much. Well, let's dive in and talk about cannabis banking. I'm actually joining you from Minnesota today, one of the states where legalization on the adult use side will happen later this year. Minnesota and Ohio are adding to the roster of states around the country that, in addition to medical, have adult use programs. So we're here today working with bankers on opening up this new market. As we jump into our conversation today, we really approach cannabis banking with a playbook in mind, understanding that we just celebrated the 10-year anniversary of the FinCEN guidance that directs financial institutions on how to manage cannabis banking relationships. And none of us thought 10 years later we'd still be under that same guidance and 3 administrations, but here we are. But that guidance has created a playbook, both for bankers to understand how to serve this industry, and we'll talk about some of those key elements today. It's also trained the cannabis industry themselves on the things that they need to do to obtain and retain access to financial services. So perhaps some of the objections that those business owners had in the early days, they have a much better understanding as a total industry now of why those requirements are in place. And then important for all of us, his examination community has figured out how to manage the financial institutions that are serving this industry. So in fact, in our portfolio, we have folks across all different charter types. OCC, we have Fed member banks that are also state chartered with the FDIC, and similar state and federal constructs on the credit union side. And so every regulatory body is facing the challenge of examining financial institutions that have taken on these customers. And so this playbook that we'll talk about today is really guiding how all of those parties are driving their participation in serving this industry. So the cannabis industry is growing as legalization continues to spread. around the country. And as consumer adoption of cannabis and acceptance of cannabis continues to become more and more popular. 2023, we saw this was about a $34 billion market. And we'll see by the end of this decade, this will be between a 68 and $70 billion retail market. Now, remember, these are the retail sales numbers. Behind these numbers is an entire ecosystem of product manufacturers, folks that transport product, testing labs, and growers themselves. So all of those plant-touching entities, including those retail shops that you might drive by, need access to financial services and require the enhanced oversight. That blue line you see at the top is the illicit market, and it is one of the sticking points both for the industry and for financial institutions. So even if we waved a magic wand and said, hey, the federal government completely understands what's going on at the state level, you still have a very active illicit market. In fact, $70 billion illicit market. There's very few markets, well, none that I can think of, that we bank as bankers, where the illicit market is double the size of the legal market. So that presents a significant BSA AML risk outside of the differences between state and federal law. And we'll talk through some of that today. Excuse me, I've been losing my voice just a little bit. As we look at 2024, we see a $35 billion market, and we are seeing that the market growth is continuing to grow as we see new markets come on through legalization. So you see both legal market growth of 12% over the next 5 years and about a 2% growth in total market. And that total market growth is lower than the legal market because we see people continuing to transition out of the illicit market into the legal market. And so about 20% of US consumers today, those are folks 18 years and older, are use cannabis at least one time per year. So a broad swath of the population is participating in the cannabis market at some point throughout the course of the years. And this is a diverse product market. So as we think about the opportunities in this market, it's not just about raw flower being grown and sold at retail. While smokables, most notably pre-rolls, are the largest part of the market, we do see that 57% of consumers use is in edibles and then other products being used. All of those different product opportunities create new businesses. So that transformation of the product from raw flower into a consumer product that can be sold at retail requires commercial kitchens and extraction equipment. So all that to say is there's some really interesting businesses that need the services of financial institutions. These are capital-intensive businesses to build out those manufacturing facilities and to create those consumer products at a state-by-state basis, then go to market at retail. Now, investment in the cannabis industry has slowed a little bit, probably not surprising as we've seen continued increase in interest rates. We've seen slowdown in investments in a lot of startup businesses, from fintechs to the cannabis industry. So last year was a pretty dismal year in terms of the number of transactions and the amount of new capital going into the market. Now, as bankers, we're not usually in the capital raising side of any business, but in this instance, what we see is oftentimes when new markets are created, we see a windfall of capital coming into those markets. That capital needs a place to be parked until it's deployed into the build out of these facilities and funding some times worth of operating losses. And so we have seen the capital contribution or new capital creation come down, even with new markets like New York coming online. So capital is harder to come by for these businesses. And so as bankers, we're more and more reliant on their operating cash flows to dictate our deposit balances. And we'll talk about some of the economic benefits of being in this business and the contribution of those balances here in just a minute. As we think about why financial institutions get into cannabis banking, there's really four areas of interest that we've seen and help our financial institutions with. Most notably, low cost deposits. So all of our financial institutions that are in this space entered into this market to drive their growth of low cost deposits. So a majority of the banks and credit unions serving this industry pay zero interest on these deposits. The majority sit in DDA. And so today, that $1.1 billion in average deposit balances that Robert mentioned, the vast majority of that is contributing low cost deposits. Non-interest income through fees charged to these businesses has also been a significant driver. Thinking about the challenges on fee income, whether it's NSFOD erosion as rules have changed there, whether it's a slowdown in mortgage and the impact that might have on fee income for most community banks. This has been a bright spot. Now, there is more competition in cannabis banking than there was 5 years ago or 10 years ago. So it's not a charge any price market. Excuse me. And we know that those low cost deposits are even more valuable than they were just a few years ago. So we have seen bankers who are in this space sharpening their pencil to retain those low cost deposits. So we have seen that fee income is not the primary driver for getting into this business, but you should still get paid for serving these customers. This is not a small business free checking environment by any stretch of the imagination. About 50% of our financial institutions lend into this industry today. That's predominantly as commercial real estate loans. And oftentimes those commercial real estate loans are not directly to the licensed operator, but those licensed operator makes up a majority or all of the rent rolls for that property. So you'll see investors or developers who are developing these properties and then finding cannabis operators to be their tenant. And so there's additional oversight needed and fewer financial institutions that will accept those tenants as part of the rent roll for the commercial loan consideration. So our bankers there are able to elicit additional yield on those, and we'll talk about some of the yield opportunity there. And then, just like we're seeing across all of community banking today, a lot of discussion about banking as a service. And so there's a need in the industry today for both alternative payments and supporting those alternative payments, and even some direct to business solutions. And so we have some of our banks today that are using their banking as a service rails, enhancing the compliance oversight because the end user of that product is a cannabis related business, but enabling those services and gathering from that either low cost deposits, non-interest income, not really anything yet on the earning asset side, but definitely a deposit strategy there around banking as a service. But just like any banking as a service function, that compliance risk comes back to the financial institution. And here, the enhanced compliance risk is definitely the BSA AML compliance and meeting those FinCEN guidance that we talked about. As our bankers go to market, they're really looking at this as in two different ways. We've seen two different markets develop. So I would say that we have bankers today that come to this and say, I'm really going to take a portfolio approach. So, maybe I have Sally down on the loan platform and she today does some ag loans and, she's also going to do cannabis banking. And, you're looking at most of those programs having fewer than 75 customers, a huge focus on local markets and existing relationships. Think about how many of our community bank boards have investors who are in commercial real estate who may be wanting to serve this industry. And so looking at serving those customers and growing those relationships. And then we see a mix of duties shared between BSA operations and the business development function, but it becomes a subset of existing jobs that exist within the financial institution. So added work in each of those areas. And then the business development function is often, like I said, it's part of commercial banking, or maybe it's part of the cash management function, given It's predominantly a deposit focus for most of our institutions. There's another group of financial institutions that are taking a line of business approach. And in a line of business approach, they're looking at having hundreds of customers, and they are generally disconnected from their branch network. So these are financial institutions that are not only looking at their home market, but looking at adjacent markets, following some of their larger customers into other states, or specifically hiring business development teams in those other states. In this line of business approach, we generally see investment in a business development team that is specific to specialty banking. So that specialty banking may be just cannabis, or may be other high-risk businesses, money service businesses, other things that have similar BSA AML risks. And then oftentimes we'll see separate either account management or operations groups supporting these customers, given all of the enhanced requirements. And then we often also see that there's a more clear delineation of responsibilities between line of business management, so growing the deposit and loan portfolio, and then separate functions within the BSA and risk management that are focused on this cannabis portfolio or a high-risk customer segment that might include money service businesses. So as you're thinking about getting into cannabis banking, you can always mature from a portfolio approach into a line of business. But if you're out competing in the market, know that there's folks in your market, might be banks or credit unions that you know today, but there may be folks from around the country that are crawling into your market because of their larger line of business approach. So in cannabis, the economics of the cannabis industry vary greatly from state to state. Licensing and the way that licensing occurs drives the profitability of the underlying license holders significantly. So I'll give you two extreme examples. So in Oklahoma, you have something like 11,000 licenses for a medical-only state. And, you know, all things considered, not a highly populated state. So you have a lot of license holders relative to the size of the market. On the other hand, you've got a state like Washington State, which has somewhere in the neighborhood of 1,500 licenses. That's both retail, product manufacturing, and cultivation for a $2 billion market. And so the profitability of each of those individual license holders is significantly different given the size of the market and the competition that they face. So in somewhere like Oklahoma, we'll see an average deposit balance of $63,000, and as high as in other adult use states, $325,000. Our average portfolio balance is about $300,000. But again, understanding the economics of your individual state and how the licensing is unfolded there. Take Florida as another example, where they have very few license holders, medical only, but they're required to be vertically integrated. You get a license, you get something like 40 retail locations, a grow op, a product manufacturing facility. And so the capital required to run those businesses and the cost of those licenses is significantly different. Millions and millions of dollars trade hands when people sell those licenses. Today, in places like Oregon, people will give up their license and sell it to somebody else for $1. So understanding the economics of your state and the progression of that market is really important. When we look at these deposit contributions then that come in from these customers, we give them a net interest margin, knowing that in most cases, we see our bankers are putting these deposits against their normal earning asset strategy, right? So you've got your bond portfolio, you've got loans, and so we use a net interest margin to value these deposits. Our bankers are generally using some sort of underwriting fee to help offset the initial cost of vetting these customers and to discourage junk applications. And so You might see an underwriting fee as low as $500. I have a banker in California that charges $4,000. He wonders why he doesn't have more customers, but you get the idea. You have to kind of you have to judge what your market will bear for an underwriting fee, but you should get paid for that upfront work. And then generally, we're seeing service charges in the form of a compliance fee plus activity charges. Generally, those activity charges are typical cash management fees, wires, ACH origination, check clearing, all of those items. Cash handling is generally held out separately. Most of our bankers use a third-party cash and transit company to manage the cash aspect of this business, and they'll have the CIT charge the business directly. What we are seeing as those deposits have become more valuable is bankers are starting to allow customers to use account analysis here to encourage them to keep balances at the bank. But because the fee income is important to offset the additional expenses associated with managing these customers, our bankers are either using a lower earnings credit rate, or they may have some charges like a base compliance fee that can't be offset with that earnings credit. So it's not as generous as your full commercial banking package, but it is providing the customer with added incentive to keep those deposits on deposit with you. And then generally, we're seeing an enhanced note rate. So whether it's that investor situation that we talked about before, where the rent rolls are predominantly licensed cannabis operators, or direct notes to the cannabis operators, we're seeing usually 150 to 300 basis point yield differential from a similarly risked credit. So with these credits, we're seeing a conforming or better debt service coverage, so 125 to 150. We're seeing a loan to value that's stripping out the green premium. So looking at your typical commercial real estate loan to value, but making sure any premium that comes from those enhanced rents is stripped out of the equation for valuing the property. And then almost always personal guarantees alongside these notes. So there are some other lending considerations, and we'll talk about that as part of the compliance function later on in our presentation. But know that there is enhanced earning potential there if you're willing to take some additional risk and lend into these businesses or to those investors that are leasing to these businesses. And then there's some expenses that you should consider. So we generally see there's some upfront one-time fees for BSA AML consulting. So that can either be with Shield or with other parties that specialize in this, but helping you to review your risk assessment, your policy. All of our bankers today have, call it Chapter 2 of the BSA policy, which is specifically addressing this cannabis banking issue, and generally some legal review of that policy before it goes to the board. And we generally will also see some legal review of both deposit agreements to make sure if you want to add any belts and suspenders to that deposit agreement, that's part of that legal review. And then there's also legal costs, not specific to one time, but for setting up new loans, generally charged to the borrower there. So some loan document changes you'll want to consider. Ongoing expenses, we see about $25,000 to $60,000 a year in additional operational expense. That's outside of staffing costs. That's things like staff certification, additional training, marketing expenses. So depending on the size of your program and how quickly you want to grow, we see that from $25,000 to $60,000. Generally, our bankers are looking at changing the scope of their audit. That's usually resulting in a $15,000 to $25,000 a year change in their outside BSA AML audit. As soon as you tell them you're in cannabis, they'll want to spend more time. That will change that audit scope. And for some of our bankers, they have hired a firm that specifically specializes in cannabis banking to do the audit of that function. So we recommend setting aside and allocating funds for that. And then more and more now, regulators are expecting that you have technology that will help you manage these customers, especially if you have any reasonable size portfolio. And we'll talk about some of the steps that you need to take on a regular basis to manage these customers and why technology is an important part of that equation. You can see here, you've got about a $50,000 in upfront expense to get started with the cannabis banking portfolio. Then over time, your staff will scale as your portfolio continues to grow. That's both a function of your business development staff and your BSA staff. And then we see some indirect staffing impact in places like finance, internal audit. There'll be some additional work that happens in each of those areas, although that generally doesn't change dramatically as the portfolio grows. Of course, if you would like a customized version of this for your individual market, we're happy to sit down with you and go through that and talk about the growth rate and the license count and what we would expect for balanced contribution based on the dynamics within your market. We're happy to spend some time with you on that. But this gives you a broad overview of some of the expenses that you might incur to start a cannabis banking program, and then what that looks like from a pre-tax profitability standpoint. Now, just a reminder, as we're thinking about cannabis banking, there's lots of benefits to the financial institution. So we've got opportunities to get low-cost deposits and non-interest income, and maybe some better than average yielding assets. But this is still Schedule I at the federal level under the Controlled Substances Act. And so that drives a real difference between what's happening at the state level and what's happening at the federal level. And all of you may remember back in 2014 when the Cole memo originally came out, provided guidance to attorney generals around the country that this is not a priority for federal AGs to go after these businesses as long as they follow certain guidelines. And that memo addressed the industry as a whole, the states that are regulating it, the market participants, financial institutions. Treasury came out with guidance that specifically addressed financial institution requirements if they were serving this industry, and the enhanced due diligence that would be expected, and the ongoing SAR reporting that would be required should financial institutions enter this space. Now, the original Cole memo was torn up during the Trump administration and Jeff Sessions. Not that he necessarily said that it wasn't true, he just said it wasn't necessary. And Treasury instead came back and said, and has reaffirmed since, that their guidance stands, and banking regulators across the country should continue to look at that guidance to evaluate financial institutions that are in this space. And while the federal government or the federal agencies cannot write official exam guidelines, and if you think about going to the FFIEC and looking at money service businesses or third-party payments and being able to look at those exam guidelines, you won't see those for cannabis banking. But what we do know is there's lots of education happening within those agencies. In addition, the state banking regulators and their association has put together specific exam guidelines that they've shared across their membership, and that we see in place today when they're out examining these financial institutions. Even if today we cleared up this issue between federal and state, as we mentioned before, we have a large illicit market. And so there are persistent BSA AML risks that exist today and will persist into whatever future state happens. And so one of the things that bankers ask me often is, well, if I build all this today and have this compliance regime in place, does it just disappear overnight if the federal government finally comes around and does something? And as we talk with bank regulators at the state and federal level, they believe that absolutely not, that because of the high risk of money laundering, and think about things like other money service businesses where as bankers, we have a lot of obligations to provide oversight for money movement and the transactions that are occurring at our financial institution, that those will continue long into the future. Even at the end of the decade, when we expect this to be a $70 billion market, the illicit market is still expected to be $50 billion. So we're going to be spending a long time working out of a market that's existed for a long time outside the legal framework. And as bankers, we're going to continue to be asked to guard against banking illegal proceeds and focusing on legal market participants. The good news is, and back to that playbook conversation, the risks are known and manageable. So first and foremost, obviously we have compliance risks. So the BSA AML compliance and going through the necessary steps that are outlined in that FinCEN guidance. And we'll talk about some of the day-to-day activities that go along with that compliance work. There's some other risks to think about that sometimes don't come up in just casual conversations about cannabis banking. One is a little bit of liquidity risk. And the regulators are looking at that in two ways. One is, what if this financial institution can't meet its BSA AML obligations and needs to exit this business? How difficult would it be for them to replace these deposits? How long would it take them to wind down this business? And so looking at what kind of liquidity constraints that puts on the financial institution. Generally, our bankers address that by having some sort of house limit on what percent of earning assets will be funded with deposits from this industry. And of course, that's going to be dependent then upon the liquidity within your earning asset strategy. But generally, community banks, somewhere between 10 and 15%. In addition, we also see some volatility in these balances. Two things driving volatility. One is in the early stages, as I mentioned before, we do see capital raising activities, although that's slowed a little bit. You do see some pretty aggressive balances in the beginning. One of my bankers from Michigan, on the last day of the year, $300 million bank got a $30 million wire. Well, that kind of lit their hair on fire a little bit when they, it's a good liquidity problem, lots of liquidity, but as you know, for ratios, that kind of screwed things up. They weren't expecting that, but new investment that one of their business customers received. So it's understanding those dynamics. In addition, these customers, at least today, are subject to 280E of the tax code at the federal level, and in some cases at the state level. But 280E of the tax code says the only thing you get to deduct is your cost of goods sold, none of your regular business operating expenses. And you can imagine for the bank, if we couldn't deduct those regular business operating expenses, how high our tax burden will be. Well, that's what the cannabis industry faces. So when it comes time for them to write their tax checks, the clunk that you see in the balance sheet is bigger for these customers than you might see for your average commercial customer. So they'll build up those tax reserves, but it's understanding the liquidity side of the equation. I think really great news, reputational risk has declined significantly. The last Pew study showed that somewhere in the neighborhood of overwhelming agreement that they should. Today's political environment, it's hard to get percentages that high on any given topic. Cannabis seems to be relatively popular. I think the reputational risk now is not doing the compliance piece correctly and then having to exit the business or having some sort of regulatory action taken against you. And so we have seen a few banks and credit unions over time have gotten into trouble because of cannabis banking, but it's not because they were in cannabis itself. It's because they didn't build the right controls and they grew way too fast. So their eyes were bigger than their stomach. So again, having things like that, that concentration limit in there and maybe some milestones around audit and examination in terms of how quickly you grow the portfolio. Some of the counterparties that we all work with may not be too excited that you're getting into the cannabis industry. So you have to think about your D&O insurance coverage. Good news there is the big providers, the hubs, the Transamericas, they're used to dealing with financial institutions that have entered this space, but you'll want to have an explicit conversation with them about your participation in this market. Then you're also going to want to talk to your correspondent bank. And so in the early days, what we saw was the correspondent bank would sometimes say, well, it was very nice having you as a customer, but if you're going to be in cannabis, you're not going to be our customer. We've seen a more nuanced approach now. Generally, what we see is, hey, for these specific transactions where that customer might be named in the transaction, we would like you not to offer those services to those customers. So think of things like international wires or foreign exchange, where the individual customer might be named. Uh, those transactions may be prohibited. So it's understanding what your correspondent bank will allow and how that impacts what products and services you can deliver to your cannabis customer. And you're probably thinking, Tony, why would a state-based cannabis company need international wires and foreign exchange? And remember, before we talked about the high percentage of product that's sold at retail today is manufactured. And while the cannabis has to be grown there in the state, all the component parts, packaging, labeling, a lot of that comes from overseas. And so the business needs to be able to perfect those transactions and get those supplies in. And so it's an important piece of the payment needs that some of these businesses have. In addition, depending on the size of business you're working with, they may have investments that are coming out of Canada. And so the ability to both get funds in and when the time is right, remit funds back will be important too. So really understanding that. And then lastly, I mentioned that most of our bankers are using cash in transit service to deal with the cash intense retail businesses. And so if you're using some of the big national providers, they may be less excited about crossing the threshold of a cannabis related business. And so there are specialty providers now that are willing to provide those services, do deposit validation, and even deliver those funds, the aggregated funds as a bank deposit to the Fed for you. So it's understanding what service relationships you have today and what additional relationships you might need to create. The good news on that cash in transit side, the very early days of cannabis banking, and you probably heard some of these stories out of Colorado and Washington, everybody had cash. The retailers had cash and they were paying the suppliers on the loading dock with bags of cash, and payroll was being paid in cash up and down the supply chain. Today, cash is almost all concentrated in retail. About 75% of retail sales are in cash, 25% are in alternative payments, ACH wallets, cashless ATM, some other methods that are out in the market today. So the cash intense piece is needed at retail, and then the wholesale side of the business has largely reverted to more traditional commercial banking. They're writing checks to each other, they're paying with ACH, they're wiring funds. And so the cash concentration and managing that side of the business on the wholesale side, it is much easier than it was in the past. So the ask of FinCEN is pretty straightforward. We want you to know the people, understand the business, and we want you to file a ton of SARs. And so we already have an obligation to know the people when we're looking at businesses. But in this case, they're really wanting you to dive deeper and making sure these owners are the ones that are approved to have this license at the state level and doing that additional investigation into that. For some of our bankers, they take that one step further and they want to know that customer's major vendors. And so it's really mapping out what people you want to understand. So one of the ways our bankers meet this obligation is also looking deeper into the ownership stack. So today you might be looking at everybody that owns a business 25% and greater. For your cannabis portfolio, you might say, I'm going to look at everybody 10% and greater. And then maybe I'm also pulling credit or doing additional background checks. Just looking at your policy there to determine what makes sense. Then understanding the business, well, what license have they been awarded? If you look at that FinCEN guidance, if you take that state license out of the equation, they're just wholly illegal. So we need to understand what the business is allowed to do. In addition, today, if you think about that commercial customer that comes into the bank today, I decided to go start with Robert, my little LLC, and we go into the bank, they're probably going to say, well, are you going to have any cash? Or are you going to do any wires? And they'll ask some questions and they'll understand our business. And then if we deviate from that in our early days of working with the bank, there'll be some alerts generated. And then we'll build up a history of activity. If we deviate from that activity, there'll be some additional alerts created. And the team at the bank will look into that to determine if there's an issue. On the cannabis side, the expectation is a little bit different. The expectation is not, what did the customer tell you they were going to do, or what did the customer do last month or last year, but instead, what is the verifiable information that we can use to understand that the deposit activity that occurred within this period, this month, this quarter, whatever our review period is, can be tied out to known sales activity that's recognized by the state. And so we're seeing the ability to bring in state seed to sale tracking data, automate those processes. But again, you're looking at real-time data, supporting information to help you understand that deposit activity, not sort of this, hey, what do I expect or what have I seen in the past? And then FinCEN asks, I don't know if ask is the right word, requires that you file limited SARs on all of these customers every 90 days, priority SARs if any of the red flags are indicated within these relationships. And then, of course, termination SARs when you terminate the relationship if necessary. So our cannabis bankers are really doing some key things on a regular basis. They've got to have a process in place to make sure pretty frequently that the license that a customer has is good. So automation is really helpful there. That the parties are good. So not only did we check at time of new account, negative news and some other information about these parties, but how are we regularly confirming that no new bad information has popped up? Considering now many of these cannabis operators are not only operating in your home market, but they may be involved in licenses in other states. So maybe they do nothing of concern in Michigan, but they go over to Massachusetts and they do something stupid. You probably want to know that. So how do we collect that information? How do we act on it? There's individual transactions that will come up that you're going to want to review and get supporting information for. Largely, these are transactions that we're pretty certain are not related to regular sales activity. So they sold an asset, they took a new investment. We're going to need to confirm that deposit activity and document that. There's no exemptions for CTRs, even though these are cash intense businesses, and we expect that cash activity, that FinCEN guidance specifically says you cannot exempt them. Then on a periodic basis, you're going to look at the total sales activity. Hey, does our deposit activity align with the verifiable sales information and the other financial information I have from this customer? You're going to file those SARs. Then you're going to look at the items that you collected at time of new account, and you're going to refresh those on a regular basis and have a process in place to collect that information. All of these are benefit from technology to help streamline and track these activities. For our lenders in the space, there's some additional considerations. One is really shocking the margins on these businesses. So we see declining wholesale prices and margins in most markets. So the state regulators do want individual license holders to be profitable, but they also want to drown out the illicit market. So in many states, they're licensing lots of cultivators, putting lots of marijuana or lots of cannabis onto the market. And so that's lowering wholesale prices dramatically, sometimes in a very short window of time. So as you're looking at the financial models that might support the repayment of those loans, making sure that you're shocking those prices. We talked about it before, the green value of commercial real estate. You have rent that is significantly greater than what you could collect from a non-cannabis business. You're going to want to adjust the valuation of that property if you're using a cash flow approach to come up with value for that property. So many of our banks will ask their appraiser to get an appraised value as is, but also for non-cannabis use. And then looking at personal guarantors, many times very good strength. There's a lot of entrepreneurs getting into this business. Many of them have pretty substantial personal balance sheets. So making sure that you're grabbing those PGs where you can. And then understanding the 280E impact on cash flow. So that's, again, where they don't have the ability to take care of those regular business operating expenses. Some good news there. We do see, if we see rescheduling later this year, that 280E will be resolved. So on the risk mitigation side, we often see a lot of cross guarantees here. So corporate guarantees, personal guarantees, making sure that you have a guarantee strategy that if for some reason the asset is impaired or seized, that you've got other places that you can go. Now, the good news is, especially on commercial real estate for legally licensed cannabis industries, we have not seen seizure of commercial real estate, and the courts have protected landlords in this case. Looking at enhanced business insights, especially if you're banking the underlying cannabis business, you're getting lots of information about the cash flow of that business. So if you start to see deterioration in that cash flow, are you acting on that information so that you can renegotiate the terms of that loan or find a way out of that transaction before your options are limited? Knowing for some of these businesses, insurance is going to be a significant cost. And so making sure that they have the right insurance in place. And then keep in mind, bankruptcy is a federal construct. And so the cannabis businesses themselves have been disallowed from bankruptcy protection. And while none of us like our customers going into bankruptcy, it does create an orderly event and protect us as creditors. And so knowing that in most cases, you're subject to some sort of state receivership, and the bank probably does not want to take control of a property that has a bunch of cannabis inside of it. And so it's understanding through your loan documentation how that receivership process will work, and making sure it's in line with the state rules around cannabis licenses. In some states, you can also take an interest in the cannabis license from a collateral standpoint, and in other states that's prohibited. So again, it's understanding what the state guidelines will allow for. As I mentioned before, we think the Controlled Substances Act will create a rescheduling opportunity this year from Schedule 1 to a lower schedule. That lower schedule will most likely be Schedule 3. Everything today on Schedule 3 requires prescription. There is no over-the-counter for Schedule 3. Less likely it would be a lower schedule. Still a lot of FDA control, both from a manufacturing and distribution standpoint, but it would solve the 280E tax problem. So there's a lot of talk about rescheduling right now. The administration has made a recommendation to the DEA. So Health and Human Services has made that recommendation to DEA. That recommendation then we would expect them to accept here within the next 90 days to 6 months, and the rescheduling would occur. It does not solve the problem today of state-based cannabis, either for medical or for recreational use, because none of those programs today look like anything else on Schedule 3 from a FDA standpoint. And so while the administration has the capability to drive what schedule this drug appears on, the controls that are required under the Controlled Substances Act are an act of Congress. And so they couldn't change what it means to be on Schedule 3. So there's some good and bad that comes with rescheduling. The good is definitely that 280E. The bad is you don't really solve some of the other issues around the payment networks, around state and federal differences. And so those will persist until we have further action. That further action might come in the form of federal recognition, at least from a banking activity standpoint, with the Safe Banking Act, or now what was passed by the Senate Banking Committee last year, SAFER. The first time it passed out of the Senate, it's passed as safe banking, I believe 7 times out of the House. I think we're at a little bit of a standstill, though, which is that I think it's unlikely that safer banking would make it through the House now, or even get to the floor, unless it was tied to some other bill. And as we're all painfully aware, the House has a lot of challenges right now, given the thin difference between the Democrats and the Republicans from a majority standpoint. So we're not optimistic around safe or safer banking. However, the change with safer banking only really codifies what's happening today in the FinCEN guidance. And so again, the work that you do today to serve this industry is not eliminated by the passage of safer banking. What it does require the regulators to do is to codify those in actual exam procedures, and provides less discretion for individual examiners when they're out in the field. And as bankers, more certainty is always greater. We would also hope, but still uncertain, the safer banking would potentially drive the card brands to lift their moratorium and to begin to allow debit and credit card holders on the major networks to have those cards accepted at cannabis point of sale. They have not committed to that, but some hope that that would drive them to do that. The last few minutes we have left, a few things to think about. One is take that crawl, walk, run approach. Regulators really like to see that, that you're building the expertise within your team, both those directly serving the customer, the BSA team, audit and oversight, as you grow this portfolio, and putting appropriate benchmarks in place to manage the size of this program. The really great news is if you're thinking about cannabis banking now for the first time for your organization, the playbook is written. So you're not having to create this out of thin air. Rely on experts. We'd love to help you to be able to navigate both the risk assessment, policy development, and go to market. Do consider the impact beyond the BSA department. So are we going to allow these clients to interact with the branch, whether it's for account opening or for transaction processing, or are they all going to go through a specialized channel? And obviously, when those folks interact with the branch, especially the cash attend side of the business, there's cost considerations there, and security. So making sure that that's considered. And then build for today and plan for tomorrow. Your individual market may allow you to get an outsized service charge today, but know that with the passage of safe banking at some point, other financial institutions will decide to get in. And as more and more financial institutions are successful at serving this industry and people understand that playbook, we are seeing more and more competition. And so today you might be able to get that outside service charge, but make sure to shock your own model, make sure that this is still profitable for you going into the future. And we believe that's where technology can help you to get that scale and efficiency. And in the short run, you can take advantage of some outsized service charges for this business. You know, I mentioned a few times the cannabis banking playbook. We've published a playbook that helps bankers get started in evaluating a cannabis banking program. If you'd like a copy of that playbook, you can pull out your phone and snap a picture of the QR code, and we will be happy to send that off to you for your enjoyment. Robert, I'm going to pass it back over to you, and maybe you can share with me if there's any questions that have come in. I'm not seeing any in my control panel.
Benny, thank you so much. This has been very informative. As of right now, I do not see any questions. We did have a question earlier about slides being available to attendees, and Richard was kind enough to let me know that there is a slide deck that we can send to those who are interested. Please feel free to reach out to me or to Tony if you're interested in a slide. We'll probably be following up with you regardless. But we'll wait here a second and see if there's any other questions. Obviously, Tony's contact is here. If you have anything related to the CB resource that you'd like to ask me, you can reach me at rfinch@cb-resource.com, or you can reach out to us on our websites. Any further comments, Tony?
Well, Robert, thank you so much for the time today, and thank you to all of you that joined us. And we'd enjoy having a conversation with any of you if you would like more information on the benefits of cannabis banking for your organization.
Perfect. Thank you so
Thanks
much.
so much.
Have a great rest of your day.
You too. Thank you.
All right. Take care.
Bye.